Hey everyone, welcome back to Corporate Decoder, the place where we, try to make sense of the corporate world. Today we're diving into Smithfield Foods' latest annual report, and let me tell you, this report is a bit like a sausage. You never really know what's inside until you take a closer look. Get ready for some juicy details. Smithfield's latest report shows that for the year ending December 29, 2024, they made $14.142 billion compared to $14 billion the previous year. So right off the bat, sales dipped a little. Smithfield has been around for almost 100 years, located in Smithfield, Virginia. They sell packaged meats and fresh pork. They employ a lot of people both in the United States and Mexico. But here's the kicker, they're not entirely American owned. A company called WH Group based in Hong Kong owns most of it. Their stock is on the Nasdaq and trades under the symbol SFD. As of March 24, 2025, Smithfield had around 93 million shares of common stock. Now, this is a big report, so they will include the proxy statement so we know exactly who's who in the company later. Smithfield makes a promise of quality food and caring for the people and planet. They focus on making food affordable for consumers responsibly. They have a bunch of segments, but mainly three: packaged meats, fresh pork, and hog production. The packaged meats, people take fresh meat and turn it into things like bacon, sausage, and hot dogs. They use Smithfield, Eckrick, and Nathan's famous brands. The fresh pork segment is all about taking hogs and turning them into cuts like bellies, butts, and ribs. The hog production folks raise the hogs to then turn them into pork. Interesting, a few months ago on January 29, 2025, Smithfield did something big. They had an initial public offering IPO. They sold shares for $20 each and made about $36 million. Before that, they also sold off their European operations, transferring them to WH Group in August. The company has been changing some other things too. Smithfield is moving away from owning farms. In December, they partnered with Murphy Family Farms in North Carolina. Smithfield sold them a bunch of sows, and Murphy Family Farms will now supply a lot of hogs. And then in February, they partnered with Vision Ag, also in North Carolina, in which Smithfield will supply animal feed plus support services. With these moves, Smithfield is clearly focused on packaged meats and fresh pork, trying to be more efficient. The report expects the global demand for pork to be high. The company sees export opportunities for their products. Walmart, they are a big customer for both packaged meats and fresh pork, accounting for about 13% of sales. Of course, there are risks. Commodity prices can swing wildly, there can be supply chain problems, consumer tastes change, disease outbreaks can happen, and there are lots of government rules that could get in the way. Commodity prices are cyclical, they change like the seasons, which impacts profit. Hog raising costs depend on what it costs to feed them. High feed costs can hurt. The supply chain could face problems. Bad weather can impact feed and may limit the ability to sell their products. The food industry is a jungle, and they're competing with companies like Tyson, Hormel, and even smaller, more nimble businesses. They need to keep up with the trends or get left behind. Consumer tastes are always changing. Social media can boost and destroy reputations fast, so one bad article can really hurt business. Disease is another biggie. An outbreak like African swine fever could devastate hog supplies. Cybersecurity incidents are also a big issue these days. They're more dependent on tech, but they could have a failure of a system. And tariffs can make things tough in the export market. Because WH Group owns most of Smithfield, it's what they call a controlled company that's in relation to Nasdaq. That means fewer corporate governance rules. Let's look at the numbers. A peek at the financials will give us a better sense of whether Smithfield is hitting the mark or missing the target. For the full year 2024, we see sales dip a bit from 2023, coming in at $14.20 billion, $14.20 billion baht. That's a really large swing, a good sign for the company. Breaking it down by segment, packaged meats actually increased its operating profit. Fresh pork jumped up quite a bit, with hog production had a massive turnaround. They lost less money than the year before. Drilling down to the packaged meats, sales went up slightly because of prices, but the company sold less total items due to bacon and ham sales. Smithfield is shifting where they get their hogs. They get a lot of them from other suppliers that aren't their own farms. As of December 29, 2024, the CEO and CFO said their operations are working pretty well. It wouldn't be a proper Form 10K without an assortment of exhibits, some with fun titles. Oh yes, let's not forget, a very important component, a nice juicy get out of jail free of $87 million from the federal government. They ended the year with $2 billion of debt, while their cash was at $943 million. Last thing, this report has been verified by Ernst & Young Click. So what does this all really mean? Smithfield is trying to focus on higher margin business. The report says packaged meats were the biggest driver of profit, but they also want to keep their fresh pork business strong through exports. There are a lot of risks mentioned, and we see it on all 10Ks. But for Smithfield, the main ones to watch are the market shifts, the government regulations, health scares about meat. Smithfield's future seems promising, but it's hard to say with commodity risk, and what the big boss WA group wants. We'll have to wait and see if Smithfield can stay on the path to more packaged meat profits. That's all for today's Corporate Decoder, so I hope you enjoyed our sausage making analysis. Feel free to comment, like and subscribe.